I'm going to go through my formal presentation. Now, if you have questions throughout, just raise your hand. Unlike most people from Washington, if I don't know, I'll tell you I don't know. And I want to leave some time at the end for questions because the bottom of the presentation, volatility. You've been through it already, but I think you haven't seen anything yet. I attend a lot of meetings throughout this great country. Over the weekend, I was at an ADM broker meeting, of which their CEO spoke, and the outlook people there, I know you'll hear from him this afternoon, I think, when it came to corn and soybean prices, they basically said, how high is high? So we've got some upside momentum. I'm going to take a policy perspective of market significant issues. That's kind of where my specialty is. First, I like to go from 30,000 feet up in an airplane, megatrends. What's going on right now that's really the umbrella that's going through. And the one is globalization, world demand. Again, I don't think I have to tell the U.S. pork industry the significance of trade. The rise of the rest, China, India, Indonesia, we have a term for it now, Chindonesia, Latin America. As per capita income increases, so does their want of a better diet. And so if you're raising anything protein, and you're in a growth market to such a degree that over the next decade or so, I began saying it a few years ago, and I firmly believe it now, we're in the beginning phases of the golden era of U.S. agriculture. If the events allow it to happen. There's some things, economy, regulations, etc., that can always put a kick in that. But these elements here, growing income, growing population, it's one thing to have growing population, but they have to have the ability to buy. They do now. It's cash on the barrelhead in many cases. You have a rising food demand. You have declining stocks as feeders. You know that the corn and soybean stocks are at very, very tight levels. There's no room for air. That was the title of one of the speeches I attended this weekend. So then you have that. Then you build on the energy pull. Just a few years ago, we had a fundamental shift in the U.S. corn market where it no longer was a bulk commodity. $1.85 corn is not going to happen again. It's just not going to be there. When China, again, you can list China as the principal reason for a bull market under almost anything the last 5 years. And not just agriculture, iron ore, cement, automobiles, etc. Their ferocious growth into now the second largest world economy in about another 10 to 15 years, they could surpass the United States, and they're not going to look back. And the demand for alternatives, which again is a sensitive subject, I know, in livestock country because the U.S. incentivizes corn-based ethanol. When you're for something, you call it an incentive. When you're against it, it's a subsidy. Okay? But it's just your Congress and your government is still people, singling out an industry and saying we want it to grow. Corn-based ethanol is almost 40% of the U.S. market. That's a chunk. That's a chunk of a product. I'll have more on that later. So a demand pull from an energy perspective on your biggest cost, the feed. Then, of course, weather. But I like to bring up weather. It's always there. But in the case of weather, we have Russia. This past year, Russia had been the fourth largest wheat exporter, and they had a major drought problem, and they shut off their exports. We used to call it an embargo. And that got the market going from about July onward in the wheat market. And they're on pins and needles on their new crop. Kazakhstan, Ukraine, it just began the domino effect of the world market grabbing as much of the stocks as they could, whether it was wheat, You saw it in sugar. In my 33-year career in this business of agriculture, I have never seen a bull market in as many commodity markets at the same time. I give a lot of sugar speeches, and they're happy. Sugar prices, both old crop and new crop. Corn, soybeans is in a bull market. Wheat's in a bull market. Your hog prices are not bad. It's just your feed costs are up and going higher. Cotton. I mean, we've had over $1 cotton. When I go down to Amarillo and Lubbock, Texas, you're going to have a fairly sizable increase in cotton acreage of probably over 1.5 million acres. So it's going to be the acreage battle. Coming into the March intentions report from USDA, the market is screaming the need for both corn and soybean acres, more cotton acres. They need more wheat acres. Where's it going to come from? So that's where the battle. The policy perspective of that is, for my first few decades in this industry, I always had the phrase and always heard the phrase, farmers are price takers. No more. They're price makers. That is a fundamental shift. Not every year, but more often than not, you're going to have higher highs and higher lows, especially in energy and probably in feed cost. So, with that going in, that's the base as far as megatrends. Now, very briefly, to show you the volatility that we've been through, I put China as far as the factor for the last 5 years, and they'll continue to grow. And now we have extreme volatility because we have this acreage battle coming up. We've got the food price rises. We've got energy demand pull. So a lot of things are going out. And in the future, if you didn't think risk management was important before, it's paramount, because one big mistake now can do you in. So that's why, from a policy perspective, in a farm bill, I plead with groups to at least go the way, if you're a crop producer, get a better revenue assurance program. If you're a livestock producer, you may just take a look at what the dairy industry is finally doing. When I first came to Washington, again, 33 years ago, I was told if I ever understood dairy policy, it was time to retire. Then, after all these years, I figured out it doesn't make sense. But now dairy people, or the industry, are wanting to get a corn hedge in their new farm bill. They want a reference price, and then they'll be protected on any run-up in the corn market after a certain reference price. Whether or not they'll be able to get it remains to be seen in this budget, cutting years ahead. But I think they're finally looking at the right approach. It's called risk management. So let's just go through real brief. 2005, we had Hurricane Katrina, where we began to see that the government did not have much vision. They weren't ready. And it led into all sorts of, meanderings in policy. In 2006, President Bush, in the State of the Union address, and it's almost like a tick on a corn chart, mentioned corn-based ethanol, his support. So next Tuesday, I know the 25th, President Obama gives his next State of the Union address. I would listen to it. It's a very important address. He'll mention trade, etc. You never know what they're going to say for sure, but that gave the investment community the confidence to invest in the ethanol industry, and it was off and running. Then we had the energy and food price rise in 2007 to such a degree that the governor of Texas requested that the ethanol mandate be waived. He did that in April. It's just a question of time before we get a request this year. But it took the EPA until August to decide that it wasn't going to do it. Then you had the financial crisis, actually began in 2007, but really became evident in 2008. And our financial system almost imploded. I tell the corn, soybean, and wheat people who are still gaga right now over their prices, remember what did prices in the last time was the macroeconomy. I'm not forecasting we're going to have, hopefully not that dire, but the world economy, especially in Europe, is still a little shaky. China is still relatively good. But at least you get too bullish. Watch the financial picture. Then we had in 2009 the implementation of the Fed just printing money like there was no tomorrow because they had to. They made some initial bad steps, but then they caught themselves and they resurrected, and they really got us out of a depression, potential. Then we saw last year world crop woes that I mentioned before. Russia, Kazakhstan, you saw the floods in Canada, you saw Australia floods, etc., just screaming for the need for protein. And the run-up all in the corn and soybean market as China continued to be a very robust importer of soybeans. And you can see what they're doing for their feed needs. They have imported some corn, but they're taking the back alley approach to their protein, and they're importing a lot of DDGs, the byproduct of ethanol. In fact, they're doing it for the carbohydrates. A lot of people were looking for them to import more corn, but they're going that way, and I think they'll continue. Then you have this year. Again, the acreage is needed under a host of commodities. Food and energy prices are on the rise. Psychologically, the speculators could get that crude oil price to $100 per barrel. I think the fundamentals don't support that. I think we're nearing a topping point in the energy market right now. But when you get the index funds, et cetera, into it, which I'm not negative towards because you need liquidity in the marketplace, you could have an exaggerated high, but to me it looks like it's topping. We could get back into the food versus fuel debate. I think it was a silly one. I know it affects you, but the real culprit in 07 and 08 was that energy price. That got into the transportation system, it got into packaging, etc., and that was the principal reason. Then I put in state finance problems. My original home state is Illinois. I mean, they're about as bankrupt as California. You can't get more bankrupt than that state. And a host of states have not had good, prudent fiscal management. Regretfully, government employment has gone up 50% more than the private sector over the last decade. Salaries for government workers are now above the private sector, and that should not occur. So you're going to see a number of state woes because the party's over. They will not have a Congress or an administration that has the votes to bail them out, because as long as there's one Republican-controlled chamber, it won't happen. So you're going to see some pull-ins, much-needed pull-ins at the state level in this state as well. 2012, I know you're sick of elections now, but I'll talk a little bit about elections coming up later on, and then a new farm bill. We'll have a new farm bill in 2012. I never usually like to put a year on a new farm bill because the last two farm bills were supposed to be done in a different year in which they eventually got completed. So I think it's always silly to put a year on a farm bill, but I'll have more on that later too. Then we have dealing with U.S. debt. I put in 2013. We have over a $14 trillion debt as a nation right now. I don't know how long the bond traders are going to give Washington, both the White House and both political parties, to deal with that horrendous debt. In another 10 years, if we don't do any changes, we will spend $1 trillion a year on just interest payments on our debt. And that's almost 50% of all the revenue the government gets in from income taxes. So it's obviously a problem. And I'll detail that in a chart later on. And in 2014, I put tax reform, and I think I'm going to merge tax reform and dealing with the U.S. debt. And I think some good things could happen as a result of both of these things. It's always better to get your fiscal house in order because it's going to affect interest rates. If that bond market gets nervous, those real interest rates are going to go a lot higher faster than anybody knows. I'm not predicting that right now. I think the bond market is going to give Washington another 2 years to see how serious they are. But the bond markets can be very fickle. You've seen that in Europe. If there's a loss of confidence in leadership, It could get really dicey right away. So again, I'm not overly confident, but tax reform is coming, and it could take many forms. Now we have President Obama. We could put a little question mark because he's changing. He's in the process of changing. He's not as liberal as the most liberal people in his party wants him to be. I think he's turning into be now a far more pragmatic president after, to use his word, the shellacking he got in the November elections. So now he's dealing, and I think now we're seeing the true Obama come out. We've had a series of changes in the White House, a new chief of staff, Daley, Bill Daley, who's far more business-oriented, so he'll be able to talk to the U.S. business community. Just the other day, yesterday in the Wall Street Journal, Obama penned an opinion piece in which he said he wants his administration to review all regulations from a cost-benefits perspective. Almost fell over. Because hopefully they'll do that in his EPA, the Environmental Protection Agency, which one senator told me the other day almost stands for the end of production agriculture, okay, of how aggressive they've been. So let's just hope that's more than smokescreen in his review of all regulations. I mentioned January 25th, his State of the Union address. I think it's key. Sometime in the week of February the 13th, he'll issue his budget for the year ahead. That's also important because that's where any administration puts their money where their mouth is. We'll see if they're going to cut crop insurance, for example, more than they already have. We'll see what he says on trade policy, of what his initiatives are. So I think that's important. In Congress, you have fewer moderates. That means more liberals on the Democratic side and more conservatives on the Republican side, which tends to lead most people to declare that it'll be gridlock. I'm not in that boat. I think the House-led Republicans now know that now they have to help govern. They just can't vote no now. And I think Obama knows that he's got to turn this economy around, and he has to work with Congress. So I think you're probably going to see more give in some of the growth aspects, but yet you can also have budget cuts. That might be too optimistic. I am in the minority on that. I'm not going to spend too much time on this one, but I just wanted to tell you the significance of this past election at the state level. You had Republicans having a net gain of 7 governors. They now control 29 governorships versus 21 on the Democratic side, and they had key wins in some big states that will parlay into impacts on the next presidential election. It will also affect congressional redistricting, because every 10 years after the census, and we just had one, they redraw the lines. And to make a long story short, it looks like when they're all done going into 2012 elections, the Republicans will gain a net seat of 5 to 6 seats just from redistricting. What does that mean? The Republicans in the House would really have to screw it up, and they have before, not to retain their control of the House. You have state elections. The Republicans gained over 680 seats throughout the U.S. legislatures. That's the most since 1928. So this past election was a loud, banging sound. It wasn't that the Republicans won. It's that the Democrats lost. They just went too far. They overreached, it looks like to me. Went too far, too fast, overreached. Sometimes I begin my speeches by saying, if you're a Democrat, you're not going to like what I have to say, and if you're a Republican, don't get too cocky. Okay? Because if there was a viable third party, they would probably really be gaining. Remains to be seen whether or not that's the Tea Party. If it is the Tea Party, then that'll draw from the Republican vote in the years ahead. That's why the Republicans are so nervous. The presidential race, the governors are key in the primaries because they can help in individual primaries going into a presidential election. Now, going into those 2012s of how policy could impact, Obama has a changed electoral map. The first time he ran for president, he won Indiana, North Carolina, and my current home state, Virginia. He's going to have a hard time winning all of those, if not any of them. So it's going to be a changed map, and he knows that. That's why he's shifting. He can't get to the center. I don't think it's in him. President Clinton in 1994, after the 1994 elections, when he got his shellacking, clearly moved to the center. And then the Republicans in the House overreached, if you recall Newt Gingrich, and they closed down the government, and it worked against them. And Clinton resurrected, got some good deals, with the Republicans at the time, and of course was reelected. The House, there's a sincere debate going on right now in Washington, and it's what's the size of the government, what it should be. I think it's a serious one, and it's one should play out. And as far as the acid-tongue relationship in Washington, the tragedy that we saw in Arizona has had a tempered impact. I'm not quite sure how long it will last. I hope it lasts a lot longer, but we had 9/11, and it just lasted maybe 6 months, if that, as far as a better tone. And then we had the Oklahoma incident. It just only lasted about 6 months, and then the tentacles come out from both political parties. Let's hope they've learned. The key for any political party is jobs and the economy. Right now our unemployment is 9.4%. The economy is growing just 50% of what it usually does after a U.S. recession, and that's the drag. It still feels like a recession in most areas of the U.S. My CEO at Inpharma, Bruce Scheer, has a good line I like to use. He says, the recession is over, but we're not over the recession. We know too many people are still out of a job and have been out of a job a long time, or there's the fear that one could lose a job. If you're in a company, you're not hiring as much, but for a host of reasons. You don't know how healthcare reform is going to play out in the years ahead, how that's going to affect a company's bottom line. You don't know if this economy is going to perk up to that 3.5% to 4% gross domestic product, GDP, but there's some pent-up employment that I think is going to come out. I think you are going to see an improving U.S. economy between now and the end of the year. I hope I'm right. But President Obama really needs that unemployment rate close to 8% when he gets serious about running for his next term. If it's anywhere above 8.5%, that's not going to be a good situation for him. As far as the Republicans, there's really no Republican leader right now. Sarah Palin, I don't think, will run, for president. She's making too much money. Her negatives are too high, just very high. And it could be a host of people. Governor Pawlenty is on the sharp list. I think one of his best lines I ever heard him make was, he translated it into government policy. He said, our policy of how people react. He said, have you ever seen the difference at a wedding when, between an open bar and a cash bar? If it's a cash bar, you have a little more sanity. If it's an open bar, well, in the case of government, it goes the same way. If you subsidize anything, comma, including unwed mothers, comma, you get more of them. Simple. Subsidies equal more. Subsidies equal distortions. But subsidies are the way of government. It's selecting winners. You're feeling it right now in a host of areas. The Tea Party definitely had the clout in the primaries for the Republicans. Some good, some bad. It depends, and I always say, what is the Tea Party? It really varies by the different regions that you go. But they found that in primaries, where very few people vote, they can have an impact. They can decide who gets elected for that particular running race. I travel a lot in this great country. In fact, I call Delta, Delta stands for Doesn't Ever Leave Airport. I've been stuck on the tarmac too often. But frequently, I sit next to somebody and they always ask you, where are you from, what do you do? And I say, Washington, D.C., I cover Congress and the White House. And usually they say, oh, I'm sorry. But sometimes I sit next to a person and they'll tell me, oh, they believe in the Tea Party. And by the time I'm off of that plane, I want to salute a flag, I'm telling you. I mean, they're serious stuff. So I think there's going to be a continued clout in the Republican Party. Now, lame duck session, I'm not going to go through all these, but Obama gave, but he got a lot. And just look at some of those. We still don't have a spending bill for the current fiscal year. We have what we call a continuing resolution through March the 4th. It's always easy to spend more money. So they spent a lot more money, both political parties. So the cutting really hasn't begun. There's a debt limit height ceiling coming up. The debt limit is $14.3 trillion. You recall that I told you we just went over the $14 trillion mark. So by the end of March, they're going to have to raise that ceiling. Now the Tea Party people, there's about 100 new Republicans coming in, and a lot of those were Tea Party candidates. They're saying unless they can get a promise, and a visible promise of substantial cuts in the budget deficit, they're not going to vote for that hike in the debt limit. Well, I don't think you want your government to default. I don't think that's going to happen. But there's going to be a lot of jockeying back and forth. We had tax cuts extended for the so-called Bush tax cuts from 01 and 03. Now, Obama told his Democratic Party behind closed doors, look, I know I said I wanted to do away with these taxes that he called for the wealthy, but I had to be pragmatic. Only did it 2 years. I'm going to win my re-election, then we'll deal with that after 2012. That's basically what he told them. Now, some in his party were so upset at him for dealing with the Republicans. Some Democrats were even beginning to question and ask for his birth certificate, okay? Now, biofuels. We had a 1-year extension of the 45-cent ethanol payment and the biodiesel incentive. Now, that industry is in difference. They're in a debate right now of where that industry is going to go. I'll have a little bit on more of that later. Estate tax, we have, again, a 2-year deal that Obama said will really deal with this longer term after I get reelected. It's a $5 million exemption individual, double for the spouse, anything over that 35% rate. In return for some of these things, they got a rather significant extension of the unemployment aid, and they got a food safety bill. So there was compromise, but at least it showed compromise. The one of the many things I've learned from being in Washington, and that I call the Disneyland of the East, the town I love and hate at the same time. When I get a lot of questions saying, why is it so uncivil there? And I remember when I was growing up, I came from a Catholic family, and we had a lot of kids. My parents had a lot of kids, and they were like ducks about every other year. And we were all lined up one year, and my dad, who was like a white man's Bill Cosby, he was a great guy to just stories, and always had a message. And he filled a glass half full one day, and he lined us up, and he asked us to talk about that. And we basically said about the same thing to him. We asked him the question, why didn't you fill it up? I'll never forget, because he said, a glass half full is very good news because I remember when it was empty. He was a Depression kid. And I use that story to tell you what's wrong with Washington. Both political parties want everything. There's no middle of the road. I'm beginning to sense, hopefully, a little more pragmatism. You saw it on the estate tax thing. When Reagan was president, they could have had a $6 million exemption. But certain farm groups, who are usually pretty good, wanted everything. They wanted zero. They called it the death tax. You saw what they got. They got nothing for many years. So again, that's the best way I can tell you that both political parties want their way. Now we have a new speaker in the House, John Boehner. He's different because, again, he's more pragmatic. He's not a Newt Gingrich. He's not an ideologue. They call him the Weeper. If you've seen the television, he's very emotional, and I've seen him weep many times. But his heart, he could really sing some country western songs, couldn't he? Pelosi was chosen as the Speaker as the Minority Leader. Boehner says he's going to have a new approach, and it's really back to the past. He's going to hold more hearings. He's going to have markup sessions where both political parties discuss a bill. They're going to vote, and he's going to have floor amendments. Now, you might think, well, isn't this supposed to how Congress is supposed to work? Yes, but it hasn't been that way for a while. So we're going to see. I'm going to test to see whether or not the transparency is really going to be there. You usually have better legislation with the debate up in front rather than behind closed doors. The health care reform bill was written behind closed doors, which was sad. Now, we have new players. Ways and Means Committee, and that's really the Trade and Tax Writing Committee in the House. Dave Camp from Michigan. Now, just because you're from Michigan doesn't necessarily mean you're anti-trade. Think autos. He actually has voted for some trade agreements. And he's going to vote for the South Korea FTA. And you're going to get the South Korea FTA by August this year, and that's very good news to your industry. Very good news. That's probably the singular policy thing, other than equitable policy elsewhere, that your industry should root for. So I think we're seeing the corner turn on trade policy, even with Obama, because he announced in his last year's State of the Union address, there's that phrase again, that he wants to double exports within 5 years. You can't do that without new trade agreements. I think he now understands that. You have budget, you have Paul Ryan. He's an up-and-comer in the Republican Party from Wisconsin. He's the real thing when it comes to budget cutting. So I would watch him for the years ahead. Agriculture, we've gone from your chairman, Colin Peterson, who was a great chairman. I really liked him. He talked out loud a lot. The reporters loved him. He didn't hold back on anything. Now we have Frank Lucas, Republican from Oklahoma. Now, he's going to be similar to Colin, but there are some differences. Colin, when he was chairman, was beginning to think about if you were a corn or soybean or cotton or rice producer who got direct payments, Colin was beginning to say maybe there's a better use for that $5 billion in a better crop insurance program, revenue assurance, etc. Frank Lucas likes the direct payments, so I think it's going to be a harder hill to climb on reform of that. He's very much, again, coming from Oklahoma with conservation, so he's very prone to like conservation programs. Coming from cattle country, I think he will help you here. He wants a more balanced farm policy, whatever that means. I think you're going to have somebody that will talk more of the total industry. And he really takes on the regulatory fervor of the Obama administration, as did Colin Peterson. They are the way you get at regulations. You may not be able to change regulations already on the books, but you can defund them. That's called the power of the purse. So when the Appropriations Committee meets, they can put a specific line in saying you do not have any employee implement this particular regulation. It's been done before. It will happen again. Appropriations, Hal Rogers from Kentucky. It's no longer fun to be on the spending committee. Reason? The budget deficit. Energy and Commerce, Fred Upton from Michigan. I went back, and last year he supported a proposed 20% cut, a 9-cent cut in the ethanol payment rate. So that's a little background. Those are the big players in the House. In the Senate, it's basically as is, but there's more Republicans. And look at the next one, the political map. In 2012, we have 23 Democrats up for re-election and only 10 Republicans. 8 Agriculture Committee members are up and only 1 Republican, Lugar, and he's going to have a primary contest from a Tea Party candidate. Now, we had news yesterday. That's why I couldn't go to your excellent event last night, because I had to work. Senator Conrad announced, he's the Senate Budget Committee chairman, a Democrat from North Dakota, announced that he would not seek re-election in 2012. that he's going to use the next 2 years as time to focus on that budget deficit, getting a new farm bill, and some other aspects of his career. We have Debbie Stabenow, who's the new Senate Agriculture Committee chairwoman, up for re-election in 2012. Her current polls, but they mean nothing right now, show her down 20 percentage points. Ben Nelson from Nebraska will have a hard contest if he chooses to run. Brown from Ohio, Casey from Pennsylvania shouldn't have trouble. Your Klobuchar, who is very popular from all my dealings with her. I've talked to her a number of times. I think she'll easily win re-election. Gillibrand from New York. But look at the numbers. And then in 2014, 20 Democrats are up for re-election, 13 Republicans. So odds would tend to indicate that the Republicans will probably control the Senate unless they really screw it up. And they have in the past. They've overreached. So we'll see. This is why you're seeing a number of senators retire if you're a Democrat. They know they're not going to be able to be chairman probably in the foreseeable future. It's just a fact of life. Now, in the Senate Ag Committee chairwoman, Debbie Stabenow. Who is Debbie Stabenow? Michigan. In her last 2 farm bills, she really pushed for more funding for fruits and vegetables. Other commodities in her state, sugar beets. I mean, the first time I ever met her was in Hawaii at a sugar beet speech. Corn, soybeans, wheat, and dairy. So at least she's got the dairy. Hopefully she knows the interrelationship between livestock, dairy, and poultry and feed policy. She's up for re-election in 2012. The ranking Republican, they haven't announced it officially yet, but it's not going to be Saxby Chambliss from Georgia, who has been. It's going to be Pat Roberts from Kansas. He's a good guy. He knows cattle. He knows the livestock industry. And he's a good guy that I think will work quite well with Debbie Stabenow. But really the kingpin on the Senate Agriculture Committee is Conrad, who said he's not going to seek re-election. In the 2008 Farm Bill, I think he was the real Ag Committee chairman. It wasn't Tom Harkin from Iowa. He did the first North-South coalition I've ever seen in a Farm Bill. He got the northern tier states, North and South Dakota, and then he worked with the Southerners, Saxby Chambliss from Georgia, Blanche Lincoln at the time from Arkansas, and he worked, of course, closely with Colin Peterson to get the Farm Bill that you got. Not a bad job. Budget cuts ahead, and here's what's going to happen. This is the percent of using Obama's own budget numbers if we don't do anything in new policy. The percent of our economy, the percent of the debt as the percent of our economy goes into the 90% area. Usually when you get at 60%, caution, yellow flags go off. If you were to give some of our numbers to the International Monetary Fund, the IMF, or the World Bank, and didn't tell them what country you were talking about, they would guess it was a developing country. That's how bad it is. Bad. And that's why I tell anyone, if you're looking at $6 plus corn, and you will be, if you're looking at, $14, sounds like an auction, soybeans, $9 wheat futures last night in Kansas City, you might want to ring the cash register every once in a while. You can't go bankrupt making money. Hedge a little. Go into the options market. Yes, they cost more, but you can sleep at night. Okay? Because if we don't deal with this, the markets will make us deal with it. The only editor Washington has is the bond market. If they lose confidence, real interest rates go up faster. Now, this is the budget where the spending is. And you can see some holy grails here. Look at Social Security. It takes about 20% of all the spending. Medicare and Medicaid, 21%. Defense, almost 20%. I'm a believer in having a strong country. Yet, this is a factoid. This country spends more on defense than the next 14 countries combined. So there's easily a couple $100 billion just right there The cottage, I've used, my stock market has been big on cottage defense companies, DISA, D-I-S-A, CACI, C-A-C-I, because that's where the retired generals go. They really do. And you can make a lot of money, you know. But that's going to be cut. Then you have discretionary funding, including the entitlement programs and farm spending, 35%. Look at that net interest, 5%. That will grow towards 9 or 10% in the next decade, as I told you before, unless something happens. You got to pay that. You have to pay the Chinese and the Japanese and the Germans who are funding our debt, one way or the other, through higher interest rates or whatever, or a higher dollar. So now what's going to give? This is a good chart because it tells farming they're not going to balance the budget on the backs of agriculture. They can't. The projected 10-year cost of all ag programs is only a little over 2% of all government spending. Now let's look through it through the function. Nutrition, food and nutrition, food stamps, they call it something else now, women's, infants, and children. All those food and nutrition programs take over 75% of all agriculture spending. I'm not saying that's a negative. You wouldn't have a farm bill if it wouldn't be for food and nutrition spending. An urbanite would not vote for a farm bill if it wouldn't have that attached to it. But look down in the commodity total, just under 7%. So they're down to the core. If they take much more out of the commodity program, it's a very weak safety net. In fact, if we were to have a bearish market for grains, our current safety net for farmers would be found wanting. If you ever pay a counter-cyclical payment again in corn country, you're in trouble. The bankers are in trouble. We just can't afford it because the structure now has built up with cash rents and land prices not to go down to that level, and if it does, there will be pain. Then you go down into the crop insurance program, which personally I think is one of the few farm programs that actually works. And of course they're taking billions of dollars out of it because it's an easy grab bag. 9%. Now, what I've talked about is farm policy linkages. We have crop insurance, and they're getting better in the livestock sector. And if you, as a hog producer, don't like the current risk management vehicles in the insurance area, come up with some innovative programs. When I go down to rice and cotton country over the years, and even sugar, I heard for decades, oh, that's really a corn and soybean and wheat program. It doesn't work for us. Well, now, I and others have told them, look, when the pie is passed, take a piece. If something doesn't work for you, make it work. And I'm seeing some commodity groups come up with some innovative programs, cotton, rice, and sugar, and they're going to join the club. The safety net is important. With the volatility that you've already been through, I know your industry was down to whatever percentage of your equity that you had not too long ago, right? A safety net is needed on the downside. You don't need farm programs when your profits are up. You only need it to halt an implosion in your industry. Talk to a dairy producer who was either too many went out or were down to their last 5% of their equity. Ask them if their safety net was adequate. It wasn't. So you're going to see a discussion of this in the next farm bill. The economy is still the leader. That's that mega trend that you always have to watch out for, both the U.S. and, in your case, the world. The ability to buy your great products has to be there. Ethanol, because it's such a substantial impact under a host of markets that you have to look at that policy. Next farm bill, timing, likely in 2012. No additional funding. So, in fact, there's no budget baseline authority for 38 programs that were in the 2008 Farm Bill. And if they were to be included in the new Farm Bill, it would take $9.5 billion of new funding. Now, where's that going to come from in this type of environment? The biggest program impacted is the Ag Disaster Program that Senator Conrad got in. So you could have the need for $4 billion plus just to restore that. Budget cuts ahead. No matter what happens in the next Farm Bill, some of the payments are going to be cut. Now, how does it impact you all? on your program, they typically, and I think it's the worst area for them to look at, they usually go to your EQUIP program, Environmental Quality Incentives Program. It's a very viable program. It has helped more than a few producers, but of course they don't understand sometimes of how that is seed money to help you get through the regulatory process, but that's typically where you'll find that impact. Direct payments, Democrats want reform, Lucas doesn't. Other issues, I've already talked enough about dairy. Conservation Reserve Program. In the last Farm Bill, the maximum acres were reduced somewhat. That could happen again. Crop insurance, most people hope that they don't. I think there will be a move now to actually increase some funding in there and make certain programs even better for revenue assurance. Sugar, it was the least controversial sugar program in the last bill, and I don't see anything going on there. Another news yesterday that broke, the current USDA Undersecretary, Jim Miller, who understands agriculture. He's one of the few production-oriented people in this administration, to be blunt. He announced that he tendered his resignation. He didn't say where he was going, but he's going to remain in a government position. The Obama's position on a new farm bill, I think he's smart enough. He won't introduce a bill. He'll have his departments analyze certain proposals, and I think that's the right way. Ethanol, which affects this industry, we have an EPA E15 blend decision. Will they allow E15 blends? They've already announced that it's eligible for cars 2007 and earlier and light trucks. They should make an announcement by the end of this month. They could delay it pending the last research results until another month or so. But the rumor is that they're going to approve it for 2001 and 2006 cars. I don't think it will have much impact because there's all sorts of liability issues at the retail gasoline stations. The tax incentives expire at the end of this calendar year. Now, the issue is we have a difference in the ethanol industry. You have Renewable Fuels Association, or RFA, is not gaga over the proposal by Growth Energy, who wants to take the current program and transition it to a new program to move some, if not all, of the funding to infrastructure, to help retail gasoline stations buy those expensive blender pumps, to build separate tanks in gasoline stations because it takes that, and also they have loan guarantees to build an ethanol pipeline from Iowa to the West Coast, Iowa to the East Coast. So that's an issue that's currently going on. Senator Grassley from Iowa said this to the industry: the ethanol industry must speak with one voice. If not, the extension of any tax provisions may be impossible. Now, for a number of you, you may want that. You may not want any extension. Food versus fuel debate will return this year. I don't think with the gusto that we saw in 2007 and 2008, because you have economic studies to show that it was the price of crude oil primarily, not all, that was the result of many of those higher prices. The RFS mandate, I think it's just a matter of time. If corn prices are going to go to the level that many think it will be, it's just a matter of time before some governor or other group puts a petition into the EPA for a mandate, and we'll have to see what happens after that. Other key issues, and then I'll open it up for questions. Regulations. That's probably the biggest thing that I get from farmers right now, is the overreach of regulations. And in your industry, I know you go through them. I spoke last summer to the Future Farmers of America, the cream of the crop in that group, and I read every one of their bios that was at the meeting. And they were so optimistic as they were going into this business of agriculture. It made me feel good. They don't know what can go wrong, so I always like to talk to young farmers and ranchers. But their one concern, almost across the line, was the regulatory albatross. So they saw it in their families. You've got CFTC position limits relative to the financial reform bill that is going out for proposed regulations. So I would watch those, especially in a rising bull market, that a governmental regulation could cap it. EPA regulations in the climate control area have gotten both political parties upset. in the farm country. You've got Colin Peterson saying he wants to cut EPA's budget by 50%. You've got the new House Ag Committee Chairman Frank Lucas saying he wants to get at their purse strings as well. You've got courts and congressional funding. The courts are so litigious right now relative to a host of farm industry matters, especially in the case of GMOs. You saw at my beginning megatrends thing that the demand pull markets, the rising population, the need for more food, the need for more grains. But look what's happening at the regulatory end. Over the next decade, the corn yield is going to have to increase more than it has been over the past 10 years. But right now it's taking the U.S. government twice as long to approve new GMO varieties. In the case of the sugar beet industry, you have one judge in California, San Francisco, the 9th U.S. Circuit, who has the U.S. GMO sugar beet industry on pins and needles, that they may, in essence, declare that they can't use it. You tell me another industry that wants to produce a product for something that grows on only 1 million acres. So you have the regulatory issue to deal with. Then you have trade policy. I've already talked enough on that. I think it's finally turning around and going your way, which is increased market access. That's what you really need. You have the product already. You have a competitive price. You just need a better market access where those tariffs go down. GMOs I've already talked about. Immigration reform. Every 35 seconds in this great country, an immigrant comes in either legally or illegally. Every 7 seconds, a new child is born. You combine those two groups and almost 50% are Hispanic. This country has changed. But you cannot have immigration reform when unemployment is 9.4%, but it will occur after 2012 elections. Livestock, your GIPSA rule. There should be competition in any industry, be it hogs, cattle, dairy, etc. Some of the rules that they have proposed are needed. But USDA, GIPSA, has proposed a rule in many people's estimates that didn't get the economic analysis that it deserved. And I think Congress may probably force a thorough economic analysis. Country of origin labeling, Canada and Mexico has challenged our country of origin labeling. They're probably going to win a case, and if they do, this will be another new Farm Bill issue. Meat labeling, some issues the industry is having to deal with. Feed prices that you're going through right now, how high is high? How does that delve into alternatives? The DDGs, your use of that, how does the ethanol policy play in? Will there be changes in the waiver, in the mandate for ethanol? All that. Now that's a lot of issues I tried to weave through in. I wanted to explain, markets are impacted by policy and vice versa. The bottom line for your industry is robust from a demand pull market. You just have to get your input cost as stable as they possibly can be. But more often than not, you're going to be in a demand pull markets for feed, all things being equal. Okay? Now, I've got a few minutes left, thank goodness. My email is wiesmeyer@gmail.com. You can ask me any particular question or comment, and I will respond. And are there any questions or follow-ups that you have right now in the time I have left? Yes, and then I'll get to them.